Hi, this is Dalia, founder of Streetwise Mortgages and Streetwise Wealth. Should I wait for interest rates to drop before I get back into real estate investing? This has been one of the most frequently asked questions that I've been getting for the past month and a half. And I decided to put together this video to help answer this question for you, but to also provide you with very specific numbers for you to think about to come to your own conclusions. This video is being recorded on March the 1st of 2024. Firstly, let's start with an important question. And the question is, what is it that we know today that we are not sure about for the past year? Well, we know that inflation is finally under control here in Canada, and the last reading came in at 2.9, which is close to where the Bank of Canada wants to see it before considering rate cuts. They know that inflation is currently being pushed by shelter costs, including real estate selling, rental prices, and mortgage costs. And this is actually very, very important. They have acknowledged that shelter costs are likely not to decrease because of the high demand for real estate. And they're actually ready to move on. Here's the exact quote by the Bank of Canada's governor, saying, "We've got to look at the whole economy, not just housing. The Bank of Canada targets CPI inflation, and shelter is just one of 8 components. Hence, if average core inflation dips well into the 2% range, rising shelter costs should not derail rate cuts." Guys, honestly, this is huge for all of us in the real estate industry. The last year, I know, year and a half actually felt like we are walking around with a target on our backs, and that the Bank of Canada and the government organization are actively and deliberately trying to break the real estate industry. At least the Bank of Canada is now ready to move on, and they are giving up on waiting for a further cool down in the property values or rents. The cool down we've just gone through, in my view, was super artificial and is driven by high interest rates. Even though the underlying demand is high due to the population growth and the chronic undersupply that we all know about in the housing market. You know what? Even if we park this high demand and undersupply potential price explosion for a second, let's say it's all neutral, we still know that historically, anytime interest rates decrease, prices start to go up. It's just a fact. So now, whether interest rates cuts happen in April or June or later in the year, everyone is sure at this point that cuts will start this year. Now, let's look at some specific numbers on what that looks like. If you were to find a rental property today, let's say at $600,000 to buy, and you get an 80% mortgage at a 6.9 interest rate, variable rate, and it takes a full year for that interest rate to actually drop down by 1%, you would pay about $5,000 more in mortgage interest versus having waited for that 1% drop. However, while you're waiting, as soon as the first rate cut comes in, prices can easily rise by 5% during that first year. That is an extra, are you ready? $30,000 in price. So, if you wait, you are risking paying an extra $30,000 in order to maybe save $5,000 in interest. And that interest, as a real estate investor, you get to write off anyway as an interest expense. I personally believe we may see a much bigger pop in values than the 5% given the pent-up demand that we've had for many years now. Listen, I'm not saying that every market is the same and every market is going to appreciate or all investments are cash flowing. I get it. Things have been tough, so getting into a property with a negative cash flow is not easy. But I'm honestly heartbroken as I'm seeing investors today passing on some amazing opportunities that are already cash flowing at higher interest rates because they want to wait for this rate drop. I am happy to show you guys some opportunities, like rent-to-own opportunities, that I'm seeing investors pass on that are generating $800 to $1,000 a month today. Imagine what that cash flow would look like once the rates start to drop. The takeaway, Taking advantage of short-term or adjustable rate mortgages can let you, as a savvy investor, lock into properties now before rents and home values move out of reach. When economic conditions improve, as an investor, you can then refinance at even better rates down the road, and see your cash flow increase. Please, please, everyone, do yourself a favor. If you're coming across cash flowing opportunities today, or even cash flow neutral opportunities today, jump, jump. This is the time to jump. Rents are going to go up from here. Rates are going to go down from here. These opportunities will be cash flowing beautifully in a year or two, and you may not be able to find them or afford them in a year or two. This is the time to make a move. Shield yourself from the negative news in the media and look at the data and look at history. This is the time investors build wealth and build cash flow. It's when everyone is fearful. If you have questions, if you're looking for a second opinion, if you want to look at cash flowing opportunities, if you want to bounce ideas off us, reach out. info@streetwisemortgages.com.